Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, David White.
And welcome all to another excellent edition of the Power Trading Hour. And of course, we meet at the appointed time.
The following takes place between 2 p.m. and 3 p.m.
Well, we had a couple things yesterday happen. And of course, if you're on the air, you can't really talk about them because you got to speak, and, some things you can pick up. What I wasn't able to do is go through the Basil book. A lot of discussion today that it wasn't so much the Fed or Powell's talk yesterday, but the Basil book that drove us back up to some highs. But you know what? It could be a little bit of both. I think there were a handful of stocks that were massively shorted, and of course those helped drive us up higher. A lot of people tend to think that this part of the year is seasonally bullish, and it is, mostly because people make the same mistakes that they've made in the past, and that is probably, or I'm getting kind of a little bit of a whiff, not a huge one, but just a little bit of a sniff. It's a little bit in the air of 1999, where everybody held their stocks to January 1st because the tax on it was going from like 32% to 15 or 17%. So everybody decided that the thing to do is just wait and we'll sell in the new year. I remember we had Qualcomm go from like $195 to $140 in 3 days because everybody else believed the exact same thing. So the question is, are we setting up for a lot of people to try to hang on, holder into the first of the year? We had some decent volume, about 15 billion shares. Now what you would have liked to seen is some more follow-up today. We don't. We have some sideways action. Not enough to actually say that we couldn't get some follow-on action, but it seems like we got it all in one shot yesterday. And fund buying may just be able to hold this up for a handful of days. So we'll take a look. Of course, when we talked about volume, it was a lot about the 15 billion shares yesterday. Most of that coming in way late in the end of the day. We're back to kind of a normal path right now at about 7.4 billion shares, which is better than the last few weeks, but it isn't any kind of blowout. So we'll look at that. Anyway, we'll look at a lot of different stocks here today. We've got Tim Ord on in the next segment, and that's only about 5 minutes away. Make sure and hang on for that. If you have any questions for Tim, email them to me at path@tfnn.com. And he takes a little while, not a big hip shooter like me. It takes a lot more time to take a look at stocks. So we'll try to get him those during the break, and maybe we'll get them fitted in before the end of the day. We've got our 3 charts for us to look at today, and it's been about 5 or 6 weeks since we've had them on for a variety of reasons. Mostly vacation for him for the first one, and then we had a big day in the market for another one, and then we went into Thanksgiving weekend for the next one, and it just kind of dragged on and on. We'll try to not do that as much, but this is probably, we'll probably have him on one more time before the end of the year, and then it will be next year. It's funny how time flies. Anyway, as we go into that, gentle reminder that we are starting our Tiger Dollar sale right now. If you'd like either one of my newsletters or anything else at TFNN, good time to sign up. Did I see maybe 40% off? Yeah, I think that was it. I'll have to go back and look, but certainly a fairly large discount. and you can use those right now to start looking about what's going on. Options market makers have not been making any changes, at least up till noon. They still are worried about a fairly steep decline. So we'll see if anything happens there. Maybe they're looking forward to the Fed that is not going to be as rosy as a lot of people think. But they are still thinking that we could be down a good 200 points in the S&Ps by the 16th. But that could change. Anyway, as we talked about earnings, we'll try to go through those very quickly. Snowflake, as we said, was down fairly significantly after hours. It had a huge short percentage. Now they've been able to drive it back up and higher. Fairly decent volume yesterday and today. But again, you've got to really, this is a time where if you've got huge short interest in a stock, not just on the bi-monthlies, but, when you look at the last week and a half, almost daily, almost a third of shares were being shorted each day in snow. You got to watch out. It doesn't matter how bad the earnings are. If they're not enough to crush the stock on the day, you'll see people actually covering those before. In the mining sector, not the gold mining sector, but in the mining sector itself, Bunge had a big plunge out here today. That was on the president talking about trying to get rid of mining in the United States. Guess presumably, like everything else, it's fine if it's not here in the United States, but certainly the thought is that maybe he's going to continue on and down that path, and Bunge taking it in the shorts, as you can say. Support comes in at about $95. On the winning side, as I said, 5 below, huge pop in here. Kind of store like a dollar store if you don't have one around them, but it's $5 now. Kind of interesting. I didn't see much business in the one or two that are around here, but who knows? The dollar store next to them, which they tend to be next to them, seems to be doing a lot of business. So maybe this is more regional, kind of tough to tell. Dollar store, or Dollar General, actually. More on the side of selling food and stuff, also on the downside. And we'll give them a little loser horn here. Down to 230.33. It's doing a little bit better than that at the moment at 234.94. But certainly you've been hanging up at highs for a very long time. Got a double test of the top on about the same volume, and now kind of coming back, and maybe more of a story of people changing their attitudes and what they're doing. A lot of people talking about people actually getting out and going into real stores, not going to the fast stops or the Dollar Generals as much, and maybe even going back to malls. We'll be back with Tim in a minute.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kegstad's Tiger Forex Report. Teddy Kegstad breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Are you grinding in the market, but seeing little to no return? Or are you a successful trader, simply looking to make your job a little easier? Learn to take the path of least resistance with David White's powerful trading newsletter. David White is an accomplished trader whose deep understanding of technology and the markets allows him to consistently find and share winning trades. Support and resistance define the ranges in which stocks trade. By understanding these trading ranges, David White is able to find the path of least resistance. David White's trading newsletter, The Path of Least Resistance, is delivered daily before the markets open to make every trading day an easy win. Visit TFNN.com today and subscribe to David White's Ultimate Trading Newsletter for $119 a month. And try all of our newsletters risk-free with our 30-day money-back guarantee. Take the path of least resistance at TFNN, educating investors. Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
And we've got Tim Ord on the line. Tim Ord has written a newsletter for over 30 years, been a trader since the early 80s, and won many awards from Trader's Digest in many different areas. And we haven't had him on for a while, so glad to see you back on the air today, Tim.
Well, thanks for the introduction. I got a couple or three charts. I guess you did get them, right?
Oh, yeah. We're good to go.
All right. The first one I really want to talk about is is NYSE, the Summation Index. And it's a pretty good chart to figure out what the intermediate term outlook's going to be. And the first thing you need is you need a selling climax. And the summation index, to get a selling climax as far as the summation index is concerned, you need a reading below minus 700. And on this chart, I could have gone back further, but they're all the same. But on the chart, it goes back to, it looks like about 2016. Anyhow, you got the summation index, which is that lower red line. The summation index is the top window. Anyhow, it got below 700. Then usually within 2 months, that can be a week or two either way, but around 2 months, you should see, in other words, you get a selling climax, so you get the market washed out. Then right after a selling climax, you need a sign of strength. And a sign of strength in the summation index is a rise to back above plus 1,000. And so go from a capitulation to a sign of strength. That whole process should take around 2 months. And I noted the times on the chart when that happened. It happened at that 2016 low, happened again at that March, or looks like 2019 December low. Then we had that March COVID crash. You had a capitulation, then a sign of strength about 2 months later. Well, just recently, 1st of October, I think it was October 7th, you got the summation index down below minus 1,000, well below the minus 700 is what you need. And right now, the markets have been rallying, and the summation index, as of yesterday's close, come in at 237. It needs to get a plus 1,000 around December 7th, which is about a week away. It could be a week later. Doesn't have to be exactly 2 months, but a lot of times it's around that 2 month time frame. So even it could come a week after that. But the important part is this rally needs to continue for it to get to plus 1,000 in the short term. So we're kind of halfway done here, and it looks like it might do it. We had a huge day yesterday because the big pop on the interest rate front, and today we're not doing so much. We're kind of consolidating the gains, but in general, for this to be continue for this market to have a bullish outlook, you need to get plus to 1,000. So we're kind of in the midst of that. So it doesn't. If we stall on this rally right now, it could hurt the intermediate term. So it needs to rally now over the next week, maybe 2 weeks. So it's kind of an important rally. We do have a Christmas rally possibly come here. We got some good news in, and so far I'm still holding along. To get to 1,000, we may consolidate up there a little bit, but in general, it bodes well for the next 12 months or better. As most of these capitulations to minus 700 to finance strings to plus 1,000, those type of situations can last a year, maybe even 2 years of a bull market. So we'll see how it plays out. But in my opinion, I think it looks pretty good so far. So especially if we get to plus 1,000, then next year, in my opinion, would be a bullish year. If it doesn't get to plus 1,000, then probably more back and forth or worse. So we'll have to wait and see. So we're in the midst of
what do you think the odds are that yesterday was a buying climax?
Well, I know what you're talking about because the volume totally exploded. That's a possibility. I don't think it is, because the last time we had something similar to this came in mid or early November. There we had a big surge of volume. I guess you might say. I can't see what date it was. It's between the 7th and the 14th, and that actually put us in a consolidation, and it flipped us sideways for a couple of weeks, and now we got something similar again. So could it be a buying climax? Yeah. I guess we'll know in about a week or several days from now if that turns into buying climax. But if we close at a new high or close higher today, I think we can continue. If we don't close higher, then that could put the spoils on the market. So it's an important time frame on a lot of different levels here, what the market can do. I think we did, if you ever look at the, I didn't send you the chart, but starting back in mid-June all the way into actually 1st of November, if you ever line up the trend readings on the close between 355 to 385, there's a huge amount of trend closes above 1.3 in that range over those 2-3 months. And that's usually a big base of panic, according to the trend readings on the close, to form a worthwhile base for the market to continue to rally. So I'm thinking that's what could happen here. I'm thinking we're going to, for too long, I think we could get to the August high up around 430. And that could be an important area. Don't know. If we make it there, that would bode well for especially over the next, say, we make it there in the next week and a half or so, then I think that would bode well for the intermediate term. We don't get there, then this possible buying climax killed the bull, I guess you might say. So
the only reason I bring it up is that the work I do on options, they really haven't gotten the message yesterday. So maybe they're a little slow, and maybe they start changing their opinion. But right now, it's still rather dour for the option market makers. So that's what I'm looking at. I did send you a couple of requests for us to look at later via email, so you may want to look at those during the break. As we said at the beginning of the show, this is the start of our Tiger Dollars. If you'd like either one of my newsletters or any of the other stuff we do here at TFNN, you can get up to 40% off, and you want to check that out at the front page of TFNN. We'll be back with Tim Ord in just a minute.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
And we're back. And see, Tim,
Yep,
you want to go to chart 2 now?
We can talk a little bit about ExxonMobil if you want to.
Okay, let me bring up a chart here real quick.
Okay, I went to a monthly chart and went back to like 1982.
Okay.
Probably should have sent it to you. But I did a ROC, rate of change, on a monthly chart, and I did an RSI on the monthly chart, and that combination, rate of change, went over 100. and the market consolidated a little bit, then went higher. We're at around less than that right now, right? 49 or something. But to me, that acceleration from 2020 low up to where it is now almost look like parabolic. I'm thinking this is probably kind of exhaustion with the upside of the monthly chart. That's how I'm feeling it. Could be wrong. Been wrong before. But let me do a volume here.
We're having a little tough time hearing you. So if you got your microphone a little closer.
All right, is that better?
Much better.
All right. Well, I'm thinking this is the big decline into 2020 up to the current rally. The rate of change on the monthly charts got over 100. In previous times when it got up around 50 or higher, the market at least consolidated for months. All of them were not a top of any consequence, but this one got over 100 on the rate of change. And so I'm thinking this is kind of a parabolic move to the upside on a monthly time frame. These markets, went from basically eyeballing it here, it looks like about 30 to over, 100, and basically a couple of years, especially on a blue chip like this one. That's kind of unheard of. So plus you got the RSI hitting over 70. So I'm thinking this is probably a parabolic move to the upside, and it's due at least for a consolidation of some sort, and possibly a pullback to the previous highs, which comes in around 70. Then from there, I don't know. But on an intermediate term basis, we're probably going to at least start a consolidation here. So that's my view on ExxonMobil. That's how I see it. It's just too fast, too quick. All right, we can move on to the next chart. Next chart is kind of just a simple chart. It's the SPX, and I got a Bollinger Band, and it's a weekly time frame. And the reason why I say 4,300, excuse me, I cleared my throat. Anyhow, the reason why I think 4,300 could be resistance, if you notice, that's the August high up there, and it's also where the upper Bollinger Bands lie. And so there's really there's a little bit of resistance at the September high there, coming in pretty close where we are right now. But I don't think that's going to be the ultimate high. I think we're going to actually push higher. And the 430 range, what happens there is going to be pretty important. If it hugs at that area, 4,300, doesn't really back away, that'll bend the Bollinger Bands to up, and the market may just crawl up alongside that upper Bollinger Band. You go up to the weekly Bollinger Band and gets price rejection, especially at the August highs there, then this whole thing could turn into a trading range where the previous lows support and the previous highs resistance. And so we could flip sideways here. Intermediate term, since we're above the mid-Bollinger Band on a weekly time frame, I guess you have to say the intermediate term is still up. So I'm looking at the 430 area as a significant resistance. And what happens from there it will depend on what happens at that 430, if we do actually get there. But I think we will get there, and what happens there will determine what the market may do next. If it doesn't really back away from that 4,300 area, then that will show strength that the market can move higher. If it backs away, then we may go back down, to the July and October lows or in that vicinity, and just build a gigantic trading range type thing. So eventually we'll break out of that potential gigantic trading range, but it could be either way. It could be up or down, so I don't know. So my bet was we're going to go to 4,300. And my bet yesterday's buying climax, at least on volume-wise, is not really the final high yet. So, but that may change for the weeks out, but that's how I see the market right now. But as it's going right now, I think we have a good shot at 4,300 on the SPX. Then from there, if we do get there, we'll have to, evaluate the market from there. So
well, we got fun.
It's a lot important here how this market performs over the next several days, week and a half. So
yeah, well, with fun buying really tomorrow and over on Monday, you should have a fairly good, at least a couple of good days. If it just hangs out there, probably maybe as good as it gets for a little bit. Anything else we've in this chart?
No, it's just kind of a simple chart, but just wanted to show you there's quite a bit of resistance at that 4,300 area. Not because it's the previous high of August, but it's also a Bollinger Band, a weekly Bollinger Bands up there. So that could provide substantial resistance. That's what I wanted to point out. So,
okay.
We can move on, or we can...
Let's go ahead and get it. By the way, if anybody wants to look at these charts in glorious high definition, I'll be glad to send them to you. Just email me at path@tfnn.com. So we're looking at the gold miners, which I think everybody was waiting for you to get to. Go ahead.
All right. Well, the top window is a bullish percent index for the gold miners index, and this is just a daily chart. Chart goes back to 2006, but on the bullish percent index only goes back to 2008. And it's just really a simple chart. And what it measures is anytime the bullish percent index, or for the gold miners index, what it does is it measures the point and figure buy signals on the stocks in the gold miners index. So right now we're showing about 52% of the stocks in the gold miners index are on point and figure buy signals. So a little over half the stocks in the gold miners index are on point and figure buy signals. What this kind of chart measures is kind of a climax type thing. When the bullish percent index falls below 8%, in other words, only 8% of the stocks in the gold miners index are on point and figure buy signals, it's usually a climatic low. And I mark those with, I can wait. I can come back.
Okay. We'll be back in a minute. And if you have any questions, you can call and talk to Tim at 877-927-6648.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
And we're back with Tim Ord, and we're looking at gold, as almost everybody at TFNN is. So go back to chart 3 here.
All right, chart 3. Funny how, getting back to the top window is a bullish percent index for the gold miners index. And all I did was, every time it got below 8%, 8% of the stocks in the gold miners index are on buy signals or lower. I just drew a vertical line, and all these, this goes back to like 2008, but it picked out all the major lows. There's one failure in 2013 there. It got below 8 and stayed below 8, and that was a major bear market going on. All the other times, at least it marked a multi-month low, if not a longer-term low. Last time the bullish percent index at 8% or lower was at that March 2020 low. And that was a decent rally going off that low. Pretty much GDX went from eyeballing here, looks like about, at least doubled. Went from 17.5 to over 42. So I'm thinking the market did get washed out on this last plunge we had going into the recent lows of, I think it was September 26th. Our opinion was a major low in GDX and or XAU, whatever gold index you're looking at, and we were in the process of a multi-month rally. Previous ones, some went sideways for a little bit before going on, like the 2015 low. It went sideways before it really got going. All the other ones were pretty much at that bottom and then reversed right up. So I'm thinking this rally is just still in the early stages, and some signals in the past have lasted, several years or even a couple of years. So I think that this current signal is at least a multi-month signal, and we're still in the early stages of the rally. When the bullish percent index, I guess for a sure top, every time the bullish percent index, only 2 times it happened, but when it gets to 100% buy signals, that's usually a top, and that marked the top in 2016, and also that top we had in 2020. Bullish percent index both got to 100%. So in other words, 100% of the stocks in the bullish percent index were on point-and-figure buy signals. So that's too much strength, I guess, and that's the top. And when it gets down below 8%, everybody's bearish. And actually, I looked at the sprout today of it's a gold trust, and it actually is a 3% discount. In other words, you can buy a gold trust 3% the price below gold. So nobody really is believing this rally, at least on gold. They think it's just a short-term pop, I guess. But when you get a discount on a trust, it's usually a good sign moving forward. And this trust in the past has had 10% premiums on the other side. So we're at minus 3%. It's actually 2.92%. But the trusts are showing people are not believing the rally, and that's usually good. So I'm thinking this is an important rally, and I think all the doom and gloom is hanging on, which is good, because if everybody agrees that the rally is going to continue, normally it fails. And here, so far, everybody's still kind of like, gold's dead for millennia. So, but I'm thinking, I don't know how big of a rise we'll have, but so far nobody's believing the rally, so I'm thinking it could last a while. So it's still in the early stages. I don't think it's going to end anytime soon, but we'll have to go month by month. But so far, I'm on a buy signal. I'm staying there. So,
well, we had a real big rally from about 1980 to 1987, and that was really before my time of trading. But the one thing I really kind of look at is once they kind of got the interest rates up, and they were pretty high, it was really once they started heading down a little bit that gold really took off and ran from 87. I'm wondering if that isn't more of a fundamental reason that we're close or closer to a high, and at that point, until inflation goes away, generally they're pretty good. Or if this is more like 2001, where we had a lot of other problems, but we got that 8 or 9 year rally.
Yeah, I'm thinking the way I'm kind of looking at it, I mean, the market's really kind of been sick, really since 2011. And, things are still popping, but most gold stocks are just penny stocks. And that doesn't usually last forever. Gold stocks are cyclical. When they go, they scream. And when they don't go, they really go almost dead. And a lot of these stocks in the gold market are just pretty much still penny stocks. So, I was around, actually, started getting to know Tom about around 2000. We caught that bull market run, and things just, I remember BGO went from 25 cents to, I think, $16 in just several years. Could we be in that time again? Well, that was 20 years ago when that bull market started. It ended in 2011. And I'm thinking we could be in for one of those pretty big cycles where a lot of these penny stocks turn into $10, $20 again like it did back in 2000. So I don't know. I've looked at a lot of different charts on the bigger time frames, and like GDX and XU, the big indexes over a monthly chart, and there's a lot of different buy signals going on the monthly time frames. So I don't think this is just a shot in the dark here, that this rally is going to rally for a month or two and just die again. I think something bigger is going on. Could it be a multi-year rally? I don't know. I don't know. But it's at least a multi-month rally. And so it's going to at least carry into next year. Will it carry beyond next year? I'm not, I'll have to wait and see. Depends if everybody gets, euphoric here over the next 6 months, this whole thing will probably die. But if this gradually goes higher, remember Joe Granville used to call it the wall of worry. And that's really what you need for the market to continue higher, is so-called wall of worry. And I think we got that in the gold market right now, wall of worry. Nobody believes it. Nobody wants to speculate, I guess. And that's good, because all the speculation comes at tops. So we'll have to wait and see. But I think the wall of worry, according to the premiums on that Sprout index, suggests there is a wall of worry here, because it's selling at 3% discount compared to cash. So it could be, could be like 2000 or 1980 again. Yeah, it could. Will it be? I'm not for sure. But I think the ingredients are there. So let's wait and see.
Well, I want to thank you for being on again. Again, this is Tim Ord, and you can catch him at the ord-oracle.com. And we'll try to have you on before Christmas again, and maybe in a couple of weeks. Thanks again,
right,
Tim.
Thank you.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And again, we've got a few stocks out after the bell tonight, but I think a lot of people are going to be looking at jobs numbers tomorrow, and probably on hold until then. I would imagine 8:30 in the morning, but we'll have a few out here moving. Ulta after the bell tonight at 4:05, and we talked a little bit about this, about how I've seen a lot of lines at the stores down here in Florida. But doesn't mean that they're that way all over. In the semi-space, we have Marvel Technologies also at 4:05. So these are going to hit in the with the futures still open. This is getting right into resistance. Energy has not been all that exciting on the way back higher. We also have Zscaler, ZS2. And kind of a nice little bounce into this, into earnings out here as more short sellers come out. Probably the more interesting one for me tonight is Ambarella, who makes a lot of smartphone components. And I have a feeling that the earnings on this will probably drive at least a little bit of Apple's movement tomorrow. These guys are kind of getting it from all directions right now. in Apple, but for the most part, you've got kind of a narrowing window here for Apple. So my guess is that that may be, you may get a little pin action tomorrow, one way or the other, in Apple and that. And that kind of, well, we're out of time for today. As always, sell when you can, not when you have to. We will return tomorrow. Same bat channel, same bat time.
Building wealth trading in the stock